Hey guys, Dan Rawitz here, University of Options with your daily market update and trade recap. Let's just get the pain out of the way. I had a terrible day. I lost money. I lost today about what I made yesterday. So that puts me even for the week, which is very frustrating. Although it was only my second losing day, I think, in 3 weeks. It's frustrating because I held a trade that there is no way on earth I should have held. And that's kind of a long story, and we'll talk about it when I go through the recap. I'm going to start with the recap today just to mix things up. Lee made money, but even he struggled. 4 wins, 1 loss, 1 break even. These are stats you just don't see from us. I had 6 wins, 2 losses. One of my losses was so big and so poorly managed, I'm ashamed of myself. I'm just going to put it out there. I showed very strong signs of being human. And I think our human side should be tucked away when we're trading. We need to be a little bit more mechanical. And I wasn't today. I had some amazing trades. Won a lot more than I lost. It was just one stupid trade that I held on to. So, and as you know, you guys have access to the trade log, so you can see every trade every day. I will say again, the overall stats are off. I don't know why this keeps happening. I'm actually getting very frustrated with it. But you have not seen us have a day under 85% win rate. So there's no way our 7-day run rate is 76%. I'm not sure what's up. We'll get that fixed. Yesterday is accurate at 100%. I think I had 9 wins and Lee had 6. And then the 30-day run rate is also accurate. Okay, let's go through them real quickly. And I'll talk a little bit about my nightmare trade. So the first trade I took was at 806, and it fit in every possible way. We had the bear signal here. Remember, once you get the bear signal, then you have to clear the dots. The dots were up here, cleared here. The chop index dropped. I went in. I ended up holding it a little bit longer. And it was not a huge win. Because again, when you hold them too long, you have time decay. And then my nightmare began. So I took this trade right after I exited the other because it seemed to me that I exited early. There was still pretty good energy pushing down. You can see these red bars here. There was lots of sell volume here, lots of sell volume. And I was actually profitable a couple times. And then it reversed. And I can't tell you how many times I should have gotten out. I did tell the group in my own defense. I said, here is the exit. You officially have an exit signal. If you stay in, do so at your own risk, and only do so if you have the experience and you're up enough for the month that you can afford to take a little excess risk. But you can see the exit came, and it would have been a very small loss. I held that thing until here, all the way to here. It ended up being a massive loss. It was, I lost $81 a contract on that trade. Now I had one other loss, and other than that, like every trade was just textbook. And the reason I say that is, again, today did not have to be a loss. Sometimes your own head gets in your own way. So the next trade I took was at 1030. And again, so perfect. We had the bull signal all the way down here. I just needed to wait until the dot was cleared. The dot's right here under this white line. It cleared here. Massive drop and chop. I waited one more candle for confirmation. And this was it doesn't look as big as it was. This was a pretty big win, really fast. 1 bar. And then came the second loss. And this was just one of those losses. This is one of those situations that you cannot avoid. You can't avoid every loss. And this one I would have done all over again. So you can see the bull signal triggered here at 11:13. And if I pull this down to the dots, you know that it needed to clear this line. I very patiently waited for it to clear. It cleared. The chop dropped, and I went in. It shot up. I was instantly profitable. And then we got this reversal candle that was just pure ugly and just snapped us right down. I closed it immediately and just took the loss. Some members did hold and probably did make money because ultimately it did run up, but I was already holding one. I wasn't about to do it again. Then the next trade I took, this was the same one I exited the loss on, but this was a really strong gain. So again, bear signal. See the dot? We got to clear that dot. The dot was cleared here. Actually, the dot was cleared here. The chop index had dropped. Was real skeptical because it was a very rough morning. And then the chop really dropped here. I waited one more candle and I jumped in, and this was a real big gain, in and out on one bar. But this bar was like 418.30 down to 417.60. So that was a 60-cent bar. Then it was just amazing. After this trade, there was amazing trade after amazing trade. Then 1243 came along. Here's your bull signal. If there's no dot, I don't see a dot, clear this wick right here. Remember, you go left and you clear the biggest wick. That wick was cleared right here, right when the chop index dropped, and it was a perfect textbook entry and another pretty big gain. And then it happened again. We came here at 12:53, and the bear signal is up here. So I'm just waiting to clear the dot. In this particular case, the sell signal came below the dots. So those can be a little bit more challenging. So what I do is I usually look for the next level of support. And you can see across here, I wanted to see a good clear cross here. And we got it. We got it here, but the chop index didn't go down. Here it was still validated, but I didn't like the chop. And then here the chop index dropped, and I was in and out in one candle. Another beautiful trade. And then the very last one, very similar. We still had the same sell signal. We had nothing new to clear. This was just a re-entry. And this particular one, I re-entered once it came below the 200-day moving average. Chop index didn't drop a lot, but it was already very low. So I was in and out in like two candles. The market was just about closing anyway. So these were like 4 really big wins, but that one massive loss just ate it all up. So that was the day. Let's talk about the market update real quick. Let's start with the time cycles. So first of all, I just want to say that the options activity got it right. I mean, you know that yesterday I was really bearish because of the options activity, but I was kind of conflicted because of what I'm going to show you next, and that was these time cycles. But you can see while the Dow seemed like it was going to turn up, it turned down. While NASDAQ seemed like it was going to keep bumping around up here, it turned down just ever so slightly. NASDAQ has still been tough to hold down. This is kind of neutral-ish. Consider it chop. And then the S&P, it was really pointing up yesterday. So it made me a little distrustful of the options activity. And now you can see it's turned down. This is still going up. So what's that going to spell? It's going to spell probably more chop. If you look here, you can see the NASDAQ is very close to topping, and then you should see it pull back here. S&P's got a little more to fall, and then it may just rally. The big money, they're back on the sell side. Sorry. So this is today or yesterday. The big money index was 44.6, down from 45.2, down from 45.6, down from 46.8. You can see it is on its way down. I've never seen the market really sustainably go up while this is going down, although we've seen more of that lately than. I mean, if you just look back, you won't see very many times when this is going down and the market doesn't fall hard with it. This is a very fascinating divergence. And then here you can see more clearly what's going on, and you can see the selling really kicked up, 95 sells. So this looked like it might be a peak to the selling, but it wasn't. We're still talking about an overall sell trend, and the options activity is still horrible. Look at this options flow all day long, red, 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 red. Not surprised it was a down day. Dealer hedging, they're still hedging green, which is bearish. So I look for this to start coming down a lot unless the hedging shifts fast. The GEX, so very interesting in that the dealer exposure was right about 420. That's where they're most exposed, but that's also where the GEX line really falls hard. So as far as I'm concerned, this is pretty bearish unless we can cross and hold 420. If we can't cross and hold 420, I think it's gonna be a pretty big smackdown. I think there was one more thing I wanted to show you. That's pretty good. Okay, now let's look at the options activity. And again, some calls popped up, which is nice, but you can see the top sale here is $17 million. So all of these that have real strong heat scores are really bearish, all puts. Now, the trend here, still red, still down. The dark pools, I don't know how much they're going to help us today, but you can see toward the end of the day, 417.85. We had a lot of 417.60s, just they kept hitting throughout the day. And we had a lot of 420.17s. So if you look at those numbers on the chart, 420.17 and 417.60. So 417.60 is exactly where we came down and bounced at the end of the day. And was it four? Sorry, you should be able to remember that for 2 seconds. 420.17. That was a big level that kept getting hit, billions and billions of dollars at 420.17. So let's put that line there. You can see what it looks like on the chart. I don't know that we got up that high. So it's right here. And oddly enough, I don't think we ever got close. That was yesterday's close. So I guess there's your hint. So yesterday, the market closed just below these dark pools. This is actually pivotal. No, it pulled back. It ran up and closed on top of that dark pool. That dark pool was there yesterday. And then the market opened below the dark pool and just crashed down. And it crashed all the way down. It actually came through this dark pool here and kind of held around there, came back up and tested it, ran through it, and ran right back down, tested it again. This big reason why I sold here, just because when it came off this dark pool, it looked pretty bad. And then it closed on the dark pool. So what does that mean? That means tomorrow, if we open up below 417.60, look out. It's going to fall hard. If we can open up and run above 417.60, we have a shot at 420, which there was a whole bunch of other dark pools, 420.16. So big range. And tomorrow's open, I think, will really tell you a lot about where it's going. I think that's really all I've got. Yeah, so I'm pretty bearish. I don't see a real good picture going in tomorrow. I feel kind of the same as yesterday. There's a little bit of data that makes me a little uncertain, but we know what to look for tomorrow. And it's really going to come down to the debt talks. If you hear any negativity on the debt talks tomorrow and it opens up below here, yikes. And of course, the opposite is true. All right, that's all I've got. Thank you for your support. And as always, reach out. If you ever want to watch us trade, let us know.